Hi everyone, Tracy here. I'm reviewing Chapter 6, Exercise 9A. The first part of the problem says Sarasota Corp began operations on July 1st. It uses a perpetual inventory system. During July, the company had the following purchases and sales, and it lists them right here. And the question asks us to calculate the average cost of each unit. The easiest way I found to do this was to take this information into Excel. So I transcribed all the information from there right here in Excel, so I had everything on one page. And this is the breakdown of how we calculate the answers. So on July 1st, we calculate the total cost of the first purchase and the average cost per unit. So we purchased 13 units at a cost of $116. So 13 units, $116 gives us a total cost of $1,508 with an average cost of $116. On July 6th, we sold 9 units at an average cost of $116. So we sold 9 units and we're still using our average cost of $116. We have to calculate the number of units left in inventory and the total cost of the inventory. So the way I did that was I did a calculation here where I subtracted 9 from 13. And I got my answer of 4. And then 4 at an average cost of $116 gives us $464. On July 11th, we purchased 6 units at a cost of $123 per unit. 6 units, $123 per unit, gives us a total cost of $738. To calculate the new average cost per unit, what we have to do is add the number of items purchased to the inventory we had on hand and add the total cost to the previous amount. So right here we have 10 units total. We had 4. We purchased 6. We now have 10. And if we add these two figures right here, we come up with our total cost of $1,202. And to calculate our new average cost, we take our total cost divided by our units, which gives us our new average cost of $120.20. On July 14th, we sold 6 units at an average cost of $120.20 per unit. So we calculate the number of units we have left in inventory and the total cost of the inventory. We had 10. We sold 6. We have 4 left. And 4 at $120 gives us $480.80. And our average cost here is still $120.20. On July 21st, we purchased 7 units at a cost of $133 per unit. 7 units, $133 per unit, gives us a total cost of $931. We once again have to figure out how many items we have in inventory, and we have to figure out our new total cost. So to figure out how many items we have in inventory, we take the 4 that we had left, we add the 7 that we've purchased, which gives us a new total of 11. We take the total cost of the 4 that we had, we add the total cost of the 7 that we've added to it, which gives us a new total cost of $1,411.80. To get our new average cost, we take our total cost divided by our units, will give us our new average cost. And on July 27th, we sell 6 units at an average cost of $128.35 per unit. You'll notice here that these average costs appear to stay the same for at least 2 transactions. The reason for this is that the average cost will not change to a new average cost until we purchase more inventory at a different rate. So here we purchased 6 at $123, so it changed our average cost right here. And we purchased 7 at $133, once again changing our average cost right here. So if we go back to our homework sheet and we review this information, we can see that this answer is correct. So we have 116, 116, 120, 20, 120, 20, 128, 35, and 128, 35. The next question said to determine the ending inventory under a perpetual inventory system using FIFO, moving average, and LIFO. So once again, I went back over to my Excel spreadsheet. So determining ending inventory under a perpetual inventory system using FIFO, or first in, first out. This would be the calculation. This information comes from this very first set of information that we received at the beginning of the question. So we continue to refer back to that. On July 1st, we purchased 13 units at $116 per unit. So we have 13 units at $116 per unit. Gives us a balance of $1,508. On July 6th, we sell 9 units at $116 per unit because this was the cost at the time that we purchased them. So 9 units at a cost of $116. Our total transaction is $1,044. And to get our new balance, we deduct $1,044 from our original balance of $1,508, which gives us a new balance of $464. And we need to know that this leaves us with 4 units in stock. We had 13, we sold 9, we have 4 left. On July 11th, we purchased 6 units at $123 per unit. 6 units at $123 per unit gives us $738, which we add to our balance, giving us a new balance of $1,202. We now have 10 units in stock because we had 4 units and we purchased 6 units. So we have 4 units at the original $116 per unit, and we have 6 units at $123 per unit. On July 14th, we sell 6 units. But because we're using FIFO, we sell 4 units at $116 because they are the last 4 of the original inventory that we purchased. And we sell 2 units at $123 to make up the 6 units that we're selling. So 4 units at $116, 2 units at $123, and the calculation is right here. So I just took 4 times 116 gives me 464, 2 times 123 gives me 246, add them together gives me a total of $710, which I deduct from my balance, gives me $492. So we now know that we have 4 units in stock at $123 per unit. On July 21st, we purchased 7 units at $133 per unit. 7 units, $133 per unit, total of $931. We add this to our balance and we get a new balance of $1,423. On July 27th, we sell 6 units. Because we're using FIFO, we sell 4 units at $123 and 2 units at $133 because we're selling 6 units in total. So 4 at $123 is $492. 2 units at $133 is $266. This gives us a total transaction of $758. Deduct this from our previous balance, gives us an ending inventory of $665. Moving on to LIFO, we purchased 13 units at $116 per unit. It gives us a balance of $1,508. On July 6th, we sell 9 units at $116 per unit because this was the cost at the time. So 9 units at $116 is a transaction total of $1,044, which we deduct from our balance, giving us a new balance of $464. July 11th, we purchased 6 units at $123 per unit. So 6 units at $123, the total transaction of $738. We add this to our balance, and we get a new balance of $1,202. On July 14th, we sell 6 units, and because we're using LIFO, we sell 6 units at $123. We do this because LIFO is last in, first out. So the last items that we purchase will be the first items that we sell. So we will sell 6 units at $123 with a transaction total of $738, which we deduct from our balance, giving us a balance of $464. On July 21st, we purchased 7 units at $133 per unit, which gives us a transaction total of $931, which we add to our previous balance, giving us a new balance of $1,395. On July 27th, we sell 6 units. Because we're using LIFO, we sell them at the last price that we purchased them at. So we sell 6 units at $133, gives a transaction total of $798, with an ending inventory of $597. Our moving average, I just used the information that I calculated up here for average cost. I did the same thing with the purchases per unit. At the cost, I added and subtracted from my balance here, giving me an ending inventory of $641.70. If we review this information back with our homework, we can see that the answers are correct. The last question that they asked is which costing method produces the highest ending inventory valuation? Well, if you look up here, you can see what they are, and you can see that FIFO gives the highest ending inventory valuation. These problems were pretty tricky for me to calculate, so I'm more than happy if anybody would like a copy of the spreadsheet to review with their study notes. I'd be happy to send it to you if you'll just let me know. Thanks, everyone. Bye.